SQQQ. Now, SQQQ, I don't like it right now, but I might like it if we have a blow-off top in tech stocks. And the reason being is a lot of these tech stocks are kind of floundering right now. Microsoft's a little floundering recently. Nvidia's floundering recently, right? Meta's even floundering recently. Like that stock's just a little over 500. Amazon stock's floundering recently, and these are the big weights. These are the big weights for the NASDAQ. So I don't really like betting against the NASDAQ if these guys are just kind of chilling right now. I want to see a crazy blow off top. I want to see maximum, kind of like we're talking about Bitcoin earlier in regards to hype, excitement. Everybody wants to be in the tech stocks. Buy the tech stock, big tech, big tech. Recently we've kind of seen a lot of more weakness there. It kind of seems like people, if anything, are looking to play some of the more, beaten down stocks in the market, some of the small caps and things like that. And we're kind of seeing some rotation potentially out of some of these big dogs into the smaller stocks. So I don't love it right now. I want to see a blow off top in regards to that, and then we can talk, right? So that's kind of hedges. Now, what's the next stock I sold out of completely, right? The other one was a hedge. This is actually a long position. Believe it or not, I sold out of Nvidia in the public count. We've done very well in this stock in a very short amount of time, made 40% on this. Now, you got to understand, Nvidia and me, we have a history. So years ago, as in that was back in 2018, I bought Nvidia stock. This is when Nvidia was like a fraction of the size it is, right? I made a bunch of money in the short term and I sold it. Do I regret that? Hell yeah, of course I regret that, right? Will I regret selling these Nvidia shares? Maybe, right? Nvidia's a $3-something trillion market cap-ish right now, right? Maybe it goes to a 30 trillion. It's another 10x, and I'm like, oh my gosh, why did I sell Nvidia? It's potential. But I think I'm making the right move here. By the way, I don't think I'm making the right move necessarily in the short term, but I think I'm making the right move over time, okay? So my guess is Nvidia's probably going to top at the $150 to $200 level before the cycle slows, right? Now, just because I think that's going to happen, one, that doesn't mean that's going to happen, right? Two, playing that and trying to perfectly time that's going to be tough, right? But I do believe eventually the cycle is going to slow substantially that we're in, and everybody's going to freak out when that happens, right? Now, people have gotten the timing wrong here. A lot of people thought in 2023 the cycle was going to slow substantially. They were way off. These cycles for Nvidia usually last 3 to 5 years, right? So the chances it was going to die in the first year? Come on, no. A lot of people thought it was going to die this year. No, it's year 2. These cycles usually last 3 to 5 years, these mega uptrends for Nvidia, right? So it's likely not dying this year either. 2025, 2026, then you can at least begin to have a conversation. So in regards to Nvidia, here's what I'm looking at here. I believe this stock likely tops in the next 3 to 9 months, and I'm talking a likely multi-year top. Not like tops in the short term. I'm talking like a multi-year top for this stock. Likely comes in the next 3 to 9 months. Maybe it makes that move to $150, $200 range, and then it starts to come down from here. And here's why I'm looking at that. So if we look at kind of a 2-year out forward P, analysts are at about a 35 2-year forward P roughly, right? Which isn't crazy for Nvidia given the growth rates this company's had. So in my opinion, 2025 is good for this company as far as their numbers go. The reason being is I think the Tesla orders are going to keep coming in for the Tesla order and their chips. Meta's going to keep ordering their chips in mass in 2025, in my opinion, as well, based upon what I'm hearing from the management team around kind of how they're thinking about CapEx. A lot of these companies haven't given finite CapEx numbers, but they're kind of signaling where they're going, and a lot of them it's going higher, right? So they're going to spend even more with Nvidia in 2025. Microsoft orders are going to be there. So all the big techs, I think their orders are going to be there for 2025. But I do think we're going to see a substantial slowdown in 2026. So people are going to start worrying about that and freaking out about that likely in 2025, right? Because it's not like if orders are going to slow down substantially in 2026, it's not like all of a sudden everybody freaks out in 2026. No, they start freaking out earlier, right? Remember, this is all a game that's played ahead of time. Nvidia's stock bottomed way before their business bottomed. We didn't see Nvidia's business really start to uptrend majorly until really the back half of 2023 in the numbers. The stock had already been going beast mode since the end of 2022, since the fourth quarter of 2022, and it went beast mode all the way into the first quarter, second quarter, right? So it's usually playing in the future 6 to 9 months. So that's why I think the stock likely tops in the next 3 to 9 months, and then we could be talking about likely a multi-year kind of, a multi-year blah in regards to Nvidia stock, right? So that's kind of my opinion on what's going on here. And keep in mind, if NVIDIA grows in 2026, like my opinion is NVIDIA's growth rates in 2026 are going to be anywhere from positive 10% to negative 10%, which is night and day difference from where they're at right now. So now positive 10% is if the AI market continues to be strong. I think they'll put up a number like that. Negative 10% if the AI market weakens significantly. And let's say these companies are just having trouble making money off anything AI, right? Eventually patience comes and plays into play here, and eventually people get sick of it and they just like, nah, like we're not gonna put in this crazy amount of orders. Like they'll still order chips, but you understand you're starting to hit the law of large numbers after 2025 for NVIDIA, where it gets damn difficult for them to keep having these 30% type growth rates, right? So that's my opinion on what happens here in regards to NVIDIA. So like I said, I probably didn't sell the top. The stock might go higher, might go to 150, 200, but I don't want to be stuck in this one and then hold it through a likely multi-year top situation, which I think is likely to happen there, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Alrighty guys, let's jump into this one on Mark Mahaney's top internet stocks from this morning.
Net stock picks: Amazon and DoorDash replacing Alphabet and Shopify following second quarter results. Joining us now with more news report.
Shopify, that's a lovely stock. You can't get out of that one, baby. Come on.
Mark Mahaney, Evercore ISI, head of internet research, and you. This is in the wake of the second quarter. I guess the first thing we can say is the internet is more important than the fax machine. Paul Krugman, what year was that? Was that I don't remember exactly what year that was.
I don't remember either, but that sounds like a factually true statement.
So after this earnings report, I think we can just put that to bed once and for all. It has been a pretty big trend, the internet, in all of our lives. You're making some moves. Is there some overall change in your view on the whole sector after the second quarter results?
Yeah, let me try this. I had 2 takeaways. One is, do we get more soft or hard landing data points? And I looked at all these companies, whether they were travel names, retail, advertising, delivery, mobility. There's a whole swath of names in there. I think they more guided you towards a soft landing than a hard landing. There were some issues in there, some of the travel names in particular.
Yeah.
But most of the names had pretty consistent fundamentals, and some of them had fundamentals that actually materially improved, even those consumer names like a Netflix and the Spotify. So I sort of thought the takeaway was more soft landing than hard landing. The second one is anybody showing a return on all of this AI spending? Is there an ROAI? And I think if you look hard enough, you can find that evidence. If you look at Meta, if you look at Amazon, if you look at Google, the 3 biggest spenders that are spending, $150 billion in CapEx capital expenditures every year on AI, I think you're starting to see these returns. AWS growth acceleration, Meta being able to improve its products and its user experience and seeing rising usage and rising return on ad spend. So I think you're starting to see the evidence come in that they're getting a little bit of a bang for all of those bucks they're spending on AI.
You said as a little bit of a bang, like you're turning, dollars into digital nickels and dimes type of.
Yes, but to be fair, Miss Becky Quick, to be fair, that's usually how the tech industry rolls, right? That just is usually how it goes. At first, you don't make crap. Remember, all these companies lost a fortune for the longest time when they were first building their businesses, right? Google did from what I remember back in the day. Meta certainly lost a fortune when they were building out their business in the early days. Amazon, same exact situation. All these companies were Uber. He's going to talk about Uber in just a moment. Huge money loser for the longest time. All these companies, massive money losers. Massive money losers. And then they started to make money. And then they started to make a lot of money. And then they started to make disgusting amounts of money that people thought this was never possible, that companies could make this much money. Like, they're really this profitable? So these tech companies understand this game. And for this AI opportunity, companies are looking at these AI opportunities as adding $1 trillion or multi-trillion dollars to their market caps over the coming years, right? And so would you spend $100 billion on chips if you were one of these tech companies, if you think you could add $1 trillion or $2 trillion or $3 trillion to a market cap over the next 10, 20 years? Of course you would. Yes, of course you would, right? And so this is why these companies are spending so much. Now, the question is, are all these companies going to get the return on investment? I don't know about that. I think some will. I think some, like it always is in business, right? There's going to be some companies that make, like, they're going to spend like $50 billion on AI chips over this next, few years, and they're going to get like a 10x from that, or 20x or 30x, right? And there's going to be other companies that spend 50 or $100 billion on all these different AI chips and infrastructure and all this stuff over the next several years, and they're not going to have much to show for it. That's business. There's going to be winners, there's going to be losers, and there's going to be some that absolutely change the game for their business models. And so it's the way it is, man. It's the way it is. It's the way it's always been, and I don't see it changing, to be quite frank.
I think it's that bad. I mean, frankly, if you look at what's happened with Meta, their ability they went back to almost 30% revenue growth. I mean, they're growing dollar-wise faster than anybody else, and it's because they used AI to rebuild their ad tech stack, because they used AI to rebuild their user interface and get us more engaged. So it actually worked for them, and if it works for them, my guess is that'll work for a few of the other companies.
Across the board, travel seemed weak.
Yes, it did.
Why?
I think it's the most discretionary. Well, for internet companies, it's the most discretionary part of spend, and it's the category that's most penetrated online. Internet's been around for a long time. One of the earliest manifestations of it, the use of the internet, was booking travel online. So it's not like there's that much secular growth. Whereas DoorDash and Uber, I think, have got a fair amount of secular growth ahead of them. So they're less macro impacted.
DoorDash is now one of your
top three picks.
Okay, your top three. Amazon.
So DoorDash and Uber. There's actually two risks to Uber right now, I see, and there's also a risk to DoorDash and Uber. So obviously Uber has Uber Eats, DoorDash has food delivery. So in regards to that business, definitely I would call it a fairly risky business for the next year, given all the recessionary concerns, right? At the end of the day, ordering on those are relatively expensive. Now, Uber does have their plans that they've really expanded over this past year as far as their, I think it's called Gold Pass or something like that, right? Where essentially it's like a membership model similar to Costco or similar to Amazon Prime, something like that, right? Where you pay a monthly fee and then you use it and you don't get delivery fees and things like that. So that's good for Uber, right? And I believe DoorDash has something similar, although I can't quite remember that. So that's going to give those business models a little more stability, but at the same time, it's a little risky. Now, I will say there is a potential positive for those food delivery platforms. And I think that positive is if you get a lot of restaurants, let's say tough economy in the next year, right? Which means tough sales to all these different restaurants, fast food places. Everybody's having trouble growing comp restaurant sales, right? Well, you're going to get more promotional, and you might get more promotional on Uber Eats and DoorDash, which could actually benefit them huge, because the one negative you've always kind of said about Uber Eats and DoorDash, it's so expensive because all the different fees that add up, and a lot of times these companies will charge more on those services than not. Well, if these companies are having a hard time making sales, they might be much more promotional on Uber Eats and DoorDash, which would make consumers much more likely to use those products, right? I mean, if you see a bunch of deals left and right, and this company has buy one, get one free pizzas over here, and this one has buy one, get one free chicken sandwiches, and buy one, get one free, frappuccinos from this place over here. Okay, now you're much more likely to go out of your way and order something on Uber Eats or order something on DoorDash, those sorts of things, right? So that could be seen as a positive. Now, Uber has a one negative going on right now, Lyft is insanely competitive in regards to pricing against Uber right now. I think if a lot of you guys, if you pulled up a Lyft ride versus an Uber ride, you'll find the Lyft ride is quite a bit cheaper right now. So it seems like Lyft is trying to take market share. I don't know if they'll be successful doing that, but the risk is for Uber. What if Uber has to start reacting to that over the next few quarters, which we don't know if that's going to happen, but what if they do? Then that's going to lower Uber's margins. That's going to lower their profitability, which wouldn't be a great thing for Uber, right? And then you could actually get back into a price war between Uber and Lyft again, which would be a whole situation that they haven't had to deal with for years now at this point in time, because Lyft and Uber hadn't really been in a price war for a long time. But if now we're going to get back into that, that's going to scare a lot of people away from Uber, right?
Dash and
Uber.
And scare away from the stock specifically I'm talking about.
Uber, even with the robo-taxi concerns, I still like Uber. I think we're going to look back on this 2 or 3 years and say that Uber actually won from the emergence of robo-taxis. And I know this is going to take a long time before we see robo-taxis roaming around Manhattan, but we're seeing them in San Francisco, so just wait.
what we were talking about that when Lyft was on. Is it that, let's just like Pepsi versus Coke? Pepsi's got all this other stuff. Coke's just beverages. Does Lyft need some of the other things? Because there was a question as to whether Uber was trying to do too many things, but it seems to be paying off, right? Is that Lyft's problem?
I don't know what that's a decent analogy, but I'd probably stretch it even more.
Saturday Night Live, Coke, Pepsi, Coke.
Yeah, no, I'm with you. Pepsi, and then it's the company that owns Coke and a lot of other brands too. Like, what you have with Uber is both mobility and delivery. What you have with Uber is a global play, whereas Lyft's just mobility, just in the U.S. That means its TAM, its total addressable market, is smaller. You don't normally make money investing in the number two player. Now, there may be a lot of trading opportunities around Lyft, but I don't think it's a long-term investment vehicle. I'm on the sidelines on the stock. I really like Uber here. I think it's also very cheap versus its cash flow.
Yeah, Lyft is kind of a little bit like reminds me a lot of like Snapchat, just to be quite frank, of kind of like one of those companies that you're like, somebody should buy them out. And don't be surprised if Lyft ends up getting bought out by somebody over time. Like, could Lyft get bought out by Amazon? Like, you never know, right? And under this current administration and kind of Linda Khan and everybody over there, I don't know if like Amazon could buy out Lyft or Google could buy out Lyft, but I don't know. Like I kind of feel like Lyft should be bought out by somebody over time.
Your thesis about the payoff for AI starting to trickle in, do you now feel okay about valuations in technology writ large?
I don't know about writ large, but the names that I look at, I look at a Google and a Meta trading at 18, 19, 20 times earnings, kind of in line with the market, maybe a slight premium to it. For names I think that can sustain 20% earnings growth, I think their valuations are very reasonable. These valuations, I think, are a lot more attractive than they were in the past. These companies have grown up under your eyes. They're paying dividends. They're buying back a lot of stock. They're doing the right things with their cash. So they should be doing buybacks than they are.
Well, we'll see for how long. I heard I'm not allowed to do those anymore either. But, nothing surprises me at this point. There's no AI fluff in the NASDAQ right now.
Oh, I'm sure there is. I'm sure there is. And so, what it seems like, it's the largest companies that can really afford to spend a lot on AI. It's a very expensive investment proposition. Those are the ones that are going to see the returns.
They can afford to blow a lot of money if it doesn't work.
And you need to blow a lot of money in order to get those kind of returns. I think that...
The metaverse, right?
That's what I was thinking, metaverse, and then everybody was like, no more spending on this.
Well, we have yet to see the reduction in metaverse spending. I think a lot of investors, including me, would like to see that. They're losing $17 billion a year on metaverse. Bring that down. It should be like $5 billion. It's fine to invest in these long-term projects. You're paid to do that, make these long-term bets. It's just sizing the bet to the opportunity. AI, though, the improvements that we're seeing. Listen to what Walmart said last week about how much productivity was improved by AI. That's a pretty big telling data point.
Do we have enough energy to power all of this? Because this is part of what we're looking at.
I don't know about that. That's an open question, and there's probably some great derivatives in the energy space because of that.
The whole idea that I still don't, the whole metaverse, it's like, I'd rather go to Tuscany than...
Yeah, all due respect, Joe, you're not going to understand the metaverse. Like that ship sailed. I mean, it's like, Joe, I'm assuming how old is Joe, do we think? I'm guessing he's either mid-60s, late 60s, and I'm sorry if I get that age wrong, but that would be my guess, okay? I would guess he's mid-60s, right? Let's imagine we go back to the mid-90s. Is a guy in his mid-60s and the mid-90s care anything about the freaking computer or the internet? No, of course not, right? The only ones that were really adopting some of the computer technology and internet stuff back then were, guess who? Like kids. And so kids actually like this metaverse stuff. They actually think it's fun. They play all types of video games in there and stuff with other kids and stuff. So it's great for them. The younger generation is what adopts the new technologies, and the older generation just doesn't, and that's fine, right? But will my kids use metaverse a ton after their kids when they're older? Probably. I wouldn't be surprised at all if they're working in the metaverse and doing all types of things.
Pictures, right? Yeah. Is that ever?
No, I think
Who's going to live in the metaverse?
it seems like a very small number of people.
Yeah, it might be famous last words. You'd be surprised. Don't be surprised if 5-10 years from now, I'm not even talking 50 years from now, 5-10 years from now, people, instead of doing FaceTime, traditional FaceTime we do now, don't be surprised if people do a metaverse type experience and it feels much more real than in a much better experience than let's say FaceTime is, for instance, right? Because maybe you could kind of be in the same space and those sorts of things, right? Or imagine the headset's much easier and it feels like you're sitting next to your friend watching a football game or a basketball game or things like that. I think there's going to be a lot of use cases that are going to come up over this next 5, 10, 15 years. They're going to surprise a lot of people. And the ones that are really going to adopt the technology is going to be the younger generation, as it always is. And then if it gets big enough, then the older generations will start to come in and use that as well, right? So, alrighty, guys, appreciate you joining me as always. Thank you so much for being here. This is maybe the longest video in the history of this channel. I think it is so hey, I think you were here for the longest video in the history of this channel. I appreciate y'all being here. Thank you so much as always. If you're looking to apply to join a private stock group, private wealth group, get access to 1000xstocks.com. Pin comment down there, click on that, fill out an application. We'll see if we can get you in there at the end of this week or maybe next week, okay? Much love and have a great day.